Before banks existed on every corner, before vaults held billions in digital numbers, before credit cards and mortgages ruled our lives, there were temples. And these weren't just places of worship, they were the world's first financial institutions, the original banks that laid the foundation for every economic system that followed. The priests didn't just commune with gods, they counted coins, stored grain, and made loans that could make or break entire civilizations. What most people don't realize is that money and religion have been partners since the dawn of civilization. The same hands that blessed offerings also weighed silver. The same buildings that house sacred rituals also house the world's first treasuries. And the same power that commanded spiritual devotion also controlled economic destiny. This isn't just ancient history, this is the origin story of modern finance itself. Every bank today, from JPMorgan to your local credit union, traces its DNA back to these temple complexes that emerged over 5,000 years ago. The techniques they pioneered, the trust they built, the systems they created, all of it still shapes how money moves through our world. Ancient Mesopotamia, the land between the Tigris and Euphrates rivers, was where civilization first learned to write, to farm at scale, and to build cities. But perhaps most importantly, it's where humans first learned to create institutions that could outlast any individual ruler or merchant. The temples weren't just buildings. They were eternal entities that could hold wealth, make promises, and honor contracts across generations. Picture the city of around 2100 before Christ. The Xiling markets, Stugarat, Anna. But towering above to the moon, God N religious grandeur was mud brick houses, and bust beneath its a massive stepped pyramid dedicates something revolutionary. Storage rooms filled with grain, silver, and precious goods. Scribes recording transactions on clay tablets, priests calculating interest rates and managing what amounted to the world's first banking operations. The temples had what no merchant or individual could possess: permanence and divine authority. When a farmer needed seed for planting or a trader required silver for a long journey, they didn't go to another person who might die, flee, or break their word. They went to an institution backed by the gods themselves. The temple would endure, the gods would remember, and the priests, as their earthly representatives, would honor every agreement. But how did places of worship become centers of commerce? The answer lies in the nature of ancient economies. These weren't cash societies. Most wealth existed in the form of grain, livestock, textiles, and metals. And all of these needed to be stored, protected, and managed. Temples, with their thick walls, armed guards, and sacred protection, were the safest places in any city. More importantly, temples operated on predictable cycles. They received regular offerings from worshippers, tribute from rulers, and income from vast agricultural estates. This steady flow of resources created something unprecedented: surplus capital that could be lent out at interest. The priests discovered that silver sitting in storage rooms could be put to work, generating more silver through carefully structured loans. The Temple of Marduk in Babylon became legendary for its financial sophistication. By the 6th century before Christ, it was issuing loans, managing investment partnerships, and even creating what we would recognize today as banking networks across different cities. Merchants could deposit silver in Babylon and withdraw it in distant trading posts, all guaranteed by the temple's reputation and divine backing. The accounting systems these temple banks developed were remarkably advanced. Clay tablets from Kanish, an ancient trading hub in modern Turkey, reveal intricate records of loans, interest calculations, and repayment schedules. These weren't simple IOUs. They were complex financial instruments that specified terms, collateral, and consequences for default. Some tablets even show evidence of what we call derivatives, contracts based on the future value of crops or trade goods. The priests weren't just religious figures. They were the world's first professional financiers, trained in mathematics, law, and economics. They understood compound interest, risk assessment, and portfolio diversification. They knew that lending to a single merchant was dangerous, but lending to dozens across different trades and regions created stability. What made temple banking so powerful was the fusion of spiritual authority with economic control. Breaking a contract with a temple wasn't just a business dispute, it was an offense against the gods. This divine enforcement mechanism made temple loans remarkably secure. Default rates were low because the consequences extended beyond mere financial penalties into the realm of cosmic justice. The success of temple banking created something that still defines our world today: the idea that institutions can be trusted with our wealth. Before temples proved this was possible, economic relationships were personal and limited. You traded with people you knew in places you could see. But temple banks showed that strangers could entrust their wealth to organizations they might never fully understand, as long as those organizations had the right combination of power, permanence, and reputation. The innovations that emerged from these temple banks spread like wildfire across the ancient world, but they also created something darker. The same divine authority that made loans secure also made debt inescapable. When a farmer borrowed seed grain and couldn't repay due to drought or flood, the temple didn't just take his land. It claimed his family, his future, his very existence. Debt slavery became institutionalized, sanctified by religious law. The Code of Hammurabi, carved into stone around 1750 before Christ, reveals how deeply temple banking had penetrated Babylonian society. But alongside rules for commerce and trade, we find desperate attempts to limit the power these institutions had accumulated. Debt jubilees, periodic cancellations of all obligations, were mandated every few years because leaders recognized that unchecked temple lending was consuming entire populations. Yet the system persisted because it solved a fundamental problem. Before temple banks, wealth was trapped. A successful harvest in one region couldn't help a drought-stricken area hundreds of miles away. Silver discovered in mountain mines couldn't reach merchants planning trading expeditions. Temple networks changed this, creating the world's first capital markets, where resources could flow to wherever they were needed most. The temples of ancient Egypt perfected this model on an even grander scale. The Temple of Amun at Karnak wasn't just a religious complex. It was a financial empire that controlled vast agricultural estates, managed construction projects, and financed expeditions to distant lands. The priests of Amun became so wealthy and powerful that they eventually challenged the pharaohs themselves for control of the kingdom. This tension between religious and political power, mediated through financial control, became a recurring theme throughout history. The temples had proven that whoever controls the flow of money controls everything else. Kings might command armies, but priests commanded the resources that fed and equipped those armies. The Greek city-states inherited these temple banking traditions, but added their own innovations. The Temple of Artemis at Ephesus became famous throughout the Mediterranean for its financial services. But unlike their Mesopotamian predecessors, Greek temples began to separate their religious and commercial functions. Sacred treasuries remained under priestly control, but secular banking operations emerged alongside them. This evolution was crucial because it demonstrated that the principles of temple banking, the trust and institutional permanence, could exist without divine backing. The techniques developed in temple counting rooms could be adapted by purely commercial enterprises. The foundation was being laid for what we recognize as modern banking. Roman temples continued this tradition but pushed it even further towards secularization. The Temple of Juno Moneta, from which we get our word money, housed the Roman mint and served as a central banking facility. But Rome also saw the rise of private bankers, argentari, who operated alongside the temple system using the same methods but without religious authority. The decline of temple banking didn't happen overnight. As trade networks expanded and political systems became more complex, purely commercial banks began to offer advantages that temples could not. They were more flexible, more responsive to market conditions, and less bound by religious restrictions on interest rates and lending practices. But the genetic code of temple banking never disappeared. When medieval European monasteries began lending money to fund crusades and construction projects, they were unconsciously recreating the temple model. When Italian merchant families like the Medici built banking empires in Renaissance Florence, they borrowed the template of institutional permanence and reputation that temples had pioneered thousands of years earlier. Even today, central banks operate with an authority that echoes the divine backing of ancient temples. The Federal Reserve, the Bank of England, the European Central Bank, they don't just manage money through market forces, they command it through institutional power that transcends any individual or government. Their buildings are designed like temples, their pronouncements carry weight beyond mere economic analysis, and their ability to create or destroy wealth seems almost supernatural to ordinary citizens. The lesson embedded in this ancient history is profound and unsettling. Banking didn't evolve naturally from trade or commerce. It emerged from humanity's deepest institutions of power and belief. From the very beginning, control over money has been about more than economics. It's been about shaping society itself, determining who rises and who falls, who prospers and who serves. So the next time you walk into a gleaming bank lobby or swipe a credit card, remember that you're participating in a system that began in the shadow of ziggurats 5,000 years ago. The priests who counted silver by candlelight in ancient Babylon created more than just financial techniques. They created the blueprint for institutional power itself. The temples proved that trust could be manufactured, that authority could be institutionalized, and that wealth could be controlled by those who understood the deepest human needs for security and permanence. Every modern bank, every central bank, every financial institution that shapes our world today carries the DNA of those ancient temple complexes where gods and gold first learned to work together. The fusion of sacred authority and economic control that began in Mesopotamian temples never really ended. It just learned to wear different masks. The priests became bankers, the altars became trading floors, but the fundamental relationship between belief and wealth remained unchanged. Those who control the temples still control the treasure, and those who control the treasure still shape the world. History doesn't repeat, but the patterns echo through millennia. The temple banks of Babylon fell, but their legacy lives on in every transaction, every loan, every promise that money represents. The priests are gone, but their system endures, more powerful and pervasive than they could have ever imagined. If this gave you a new perspective, hit subscribe. History has the answers. I'll show you where to look.